let's kick things off the usual way we always do. So of course, Mike, tell me how's the golfing been the past week?
You know what? I've got more money in my pocket than less, so it's been a good week.
Good. No,
But
awesome.
I got to say, I had to. I've got family in town, so I had to bow out of our usually our money game on Tuesday. So there was money to be had, and I wasn't there to take it. So maybe next week.
A lost opportunity, but no,
Yes.
it's great. Hey, I could give you that $10 for the golf advice that you gave me before we hit the recording button. But no, hey, so let's hop into it. I want to give people a very quick condensed. I know, we've covered a lot of this. Why companies benefit, banks, mortgage companies, car dealerships, etc. How they benefit from using Marble. Obviously, there's nothing else in the space. Why they would choose you, and trying to let people know how big this really can get. And then on the other side, just touching on the size of the industry, potential revenue per client. I know it's so many variables, but just really try and give people a understanding of how big can this be. And so, I guess let's start it off. If you want to kick it off with, why do companies choose you? If you want to maybe pick a couple points, why do they choose Marble?
Okay, so real simple of why we've been successful in getting industry partners and continue to grow the industry partners. It is, we are making them aware of a lost opportunity. The companies that we partner with have the opportunity of a client wanting to access credit, wanting to purchase something from them. So when they're not able to fulfill that client's needs, what we provide to them is twofold opportunity. One, we provide them a source of revenue whereby we have access to the clients that they deny, that they have not able to fulfill their request, where we help them rebuild their credit. So for the clients that we help build or rebuild their credit that have been sent to us from our partners, we pay them a referral fee, which is found money for them, because otherwise they would just move on to the next. The second part of the equation is, once we've rehabilitated that client, they become a customer back to the partner in order for them to fulfill what they wanted to purchase in the first place. So it is twofold for them. Not only do they get a fee for referring the client to us, but they also get the client back where they can fulfill what the client wanted in the first place.
Yeah.
So that's why industry partners are knocking at our door, our phone's ringing off the hook. You'll see more and more coming in as you see the opportunity for them, and nobody else is doing this.
Yeah.
That's the benefit.
And maybe, I'll touch on it again from a non-credit rebuilding expertise, but, in the things that were interesting to me that we've covered in other videos, just a very quick. So you had people, if they want to buy a house, in Canada, they just raised the required credit from 600 to 680, I think was the number. You can correct me if I'm wrong. So anyone that's under 680, but of course above 600, well, now they can't get a house. To a mortgage company, they're looking at this as found money. When they work with Marble, someone between that and looking at a car dealership or anyone else is the same thing. I'm trying to buy a car, I don't have the required credit. So I go to the dealership, they go, hey, you don't meet the requirements right now, but we can send you to this company that hopefully over the next couple months they can raise you up to the required number, and of course you can then buy your car. So this client goes to them, they still want their car, then they go to Marble, they raise their credit, obviously a win-win there, and then they go back to the car dealership and make the purchase for the car. So that's how a lot of these people, benefit. And like you said, it's found money. It sounds to me like the easiest kind of sales pitch ever. Hey, well, these people that you aren't able to offer your service to anyway are able to use our services, and then boom, now they're your customer. So instead of having to, do the whole process, do the credit check, and then turn them away, well, hey, there's another angle. We can help them, and you can still, buy that car or sell them that car, or sell them that house.
So you're absolutely correct. And the magnitude of this, as we've identified earlier, there is a third of the Canadian population that is financially excluded or underbanked. Now, I'm not saying that, for example, Jason, you want to go buy a car, but you don't have the credit score to be able to get a traditional bank loan to get a car, or even the dealership to fund it personally. You can definitely go get a loan for the car because they'll use the car as security. But do you want to pay 28%? Do you want to pay 45% interest for that car? Oh. Does that car mean that much to you that you're willing to pay that type of interest rate for the car? Those are the people that we're trying to help, because there are the payday loans, there are the lenders of last resort that there's a lot of people that will never ever qualify that go that route. Those aren't the people. We're going after the top 20% of the industry that have been financially excluded, have the wherewithal, but just need help in reestablishing their credit. That is one sector of the market. The other sector of the market that we've spoken about, which is, again, another enormous opportunity for Marble, is helping the hundreds of thousands of immigrants that come to this country that have no credit. In Canada and in most countries, if you want to buy something, unless you have the cash, you're going to need credit. And in order to access credit, you need to have a credit report or credit score that gives the lenders the comfort level that you're going to be able to repay them back. And if you're an immigrant, well, you've got no history, you've got no credit history. So how can a bank, or how can an auto dealership, or how can a furniture company, or how can a mobile phone company give you credit if you've not had the opportunity to establish credit? Plain and simple.
Just to kind of put that back into, again, the non credit expert eyes, which I guess is me here, so putting that all into something. So two angles. You guys have people that are underbanked or kind of financially distressed. You say that's about 10 million people. Again, just in Canada alone, 10 million people that obviously you guys can help out. Even if you're just looking at the top 20%, 2 million people in Canada alone and growing that are going through some type of financial distress that you guys can help out. The other side, you've got 300,000 to 500,000 immigrants coming in a year in Canada, where the requirement is they have to have at least $300,000 to $500,000 in liquid assets when they come over, but they have no credit. So you guys are looking at, of course, offering them a fast track where they can build the credit. And of course, for people, if you've tried to buy a house, if you've tried to buy a car, or at least with putting down a down payment, having a higher credit reduces the amount you'll pay. So for sure, hey, we're talking, even if we can get them 1/10 or 0.5%, these guys are saving thousands of dollars in the long run, which is of course important for Marble. So do you want to go into maybe a little bit about how Marble makes money off of each section? Of course, I know you guys are trying to do a great thing and you are helping people, but let's talk about how Marble makes money.
Sure. We have currently our revenue model is a SaaS-based, subscription as a service. Okay, so on a SaaS-based product. To date, on our fast track loan. We've been making money clearly on the difference of what it costs us to access capital to what we lend it out at. And our capital we get at 8, 9, and 10%. We lend it out at between 24 and 31%. The difference is there in where we make money. On a go-forward basis, what we've identified when we've entered into this LOI with Clearhaven on this $100 million forward flow type of arrangement, we will make a fee approximately 8 to 10% on every loan that we originate. And we also make a annual fee paid monthly on servicing the portfolio. If we only, with the current fast track model, with the growth on a yearly basis of insolvencies and where consumer proposals are overtaking bankruptcies, that industry alone is growing by about 17% a year. There are, in 2019, 120,000 plus insolvencies. Over 60% of those are consumer proposals. If we only capture 10% of that market, our loan portfolio will be well over $100 million in less than 3 years. And of that $100 million in that portfolio, that is only, like I said, scratching the surface of 10%. So we've got over 12 million people in Canada that are underbanked, financially underserved. Our Score Up subscription-based model, where we help people improve or actually gain a credit score from the immigration side or from the credit rebuilding side. And our model there ranges anywhere from $49 to $99 a month on a subscription base, depending on the services that they are looking for from Score Up. If we only access 10% of that, so that's 1.2 million out of the 12 million Canadians that are underbanked at, let's just say $50 a month. Let's just say $20 a month, because there'll be, as the service becomes better, as it becomes more technologically advanced, it'll be able to go out more to the masses. The costs will come down. At 1.2 million at $20 a month, the magnitude of the revenue that Marble has access to, being the first mover in this industry, and nobody else is servicing these people, is mind-boggling for the investors in Marble. But take that aside, the data that we're collecting that will eventually produce a Marble score that will help creditors be able to understand better these underbanked and underserved consumers that want to re-enter mainstream economy is blue sky beyond blue sky for what Marble has the potential to do.